All right. Good afternoon, everyone. Good evening, everyone, wherever you are in the world. This is Mark. Thanks for joining me for today's live stream analysis. We're going to be taking a look at the Bitcoin swing trades. Again, it's important that we look at the profit targets. I want people to understand why we're out of the market and why we're waiting for a pullback, because I've gotten a number of questions about buying it, because again, from people that have missed the move, and it's really all about risk. So we're going to take a look at that. Also, we're going to take a look at the stock market since it's gotten nice and hammered, and we're going to look at where the buying opportunities can be, okay? Because, if you turn on the news right now and all that other nonsense, they're going to be over dramatizing bearish stuff. That's typical of the herd mentality, and we want to look at this as an opportunity to potentially buy. But it doesn't mean we step in front of it, okay? So we're going to take a look at that. By the way, we had our short positions from the Qs that we had called a couple of weeks ago, which, performed well. We anticipated the pullback nicely. Now it's about turning this thing around, or waiting for the market to turn around and seeing what stocks are going to be best for swing trades or even position trades. All right, so with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, for those of you that are new, hey, Sean, for those of you that are new, if you don't know how this works, please share your symbol or your market that you'd like me to analyze. So once I complete my analysis portion of this, I can go over the charts that you want to see. I know we had a couple of questions about some of these unusual altcoins like DOT, against the dollar, and there was another one in there. So we'll take a look at those, but let me know what markets you'd like to see, okay? And we'll take a quick look at those as well. All right, also, you know that today is Monday, right? And on Monday, what do you think we go over on Mondays? We go over the economic calendar, because it's important to get an idea of what to expect in terms of scheduled economic news throughout the week, especially if you're involved in forex. Now, I know we don't have a lot of forex traders, but this can also affect stocks. All right, so let's take a look at this real quick. We have, what's tomorrow, the Tuesday, the 27th. We have capital goods orders. Okay, durable goods. I'm not going to worry about that number. It's usually not a market mover, okay? Australia, RBA trimmed mean CPI, not important. Consumer price index for Australia, not important. It's not a big market mover. Okay, especially since we're not in any, we don't have any trades in that area anyway. All right, so we have the Bank of Canada interest. Oh, wait, hold on. ECB president. Okay, so on the 28th, what is that, Wednesday at 8:45 a.m., ECB president speaking. This can affect euro and pound. So that is kind of important if you're involved in those pairs. I know Michael had a long in the euro that he got into, so definitely want to see how that affects the market. All right, it could push the market higher or lower. You don't know how. You can't go into it with an opinion. You have to see how the market adjusts after this is out. Okay. Hey, everyone. HS and Kev, Sean, nice to see you all. Then we have on the 28th at 9 a.m., we have the Bank of Canada interest rate decision. Wouldn't worry about it. We're not involved in the dollar Canadian anyway. Right now, I believe we're out of that trade. If you're in that, that's, you obviously want to be aware of this outcome. It can move the market either way. Most of the time, these are non-events, okay? Even the U.S. rate decision, a lot of times, doesn't have a major effect, although it can. Japan interest rate decision, okay? That's also on the 20th at 10 p.m. So that could make, if there are any surprises in this, like then there's a BOJ monetary policy statement and press conference, that can certainly have an effect on the stock market, depending on what they do, because the yen, the yen used to be like, this really tight correlation between the S&P and the yen. I guess it's because of the dollar relationship. I haven't really looked at that in a while, but it might be worth paying attention to at least, or be aware that it's coming out. It can cause unusual moves in the stock market, okay? Even if they're small and temporary. Then we also have, what's this, at 7:30 a.m. on the 29th, which I believe is Thursday, the U.S. GDP annualized. Usually not a market mover. Now we have on the 29th at 7:45 a.m. we have the ECB rate decision. Again, that can affect the euro, it can affect the pound, it can affect the DAX, and if there's any surprises, hey, obviously it can affect the dollar too. So something to just be aware of. Okay. Germany harmonized index consumer, wouldn't worry about it. Policy statement and press conference at 8:30 a.m. Just pay attention, just pay attention, I'd say, at least know that it's there. But I wouldn't expect a 200-point move in the stock market as a result of something like this. Now, as the week finishes out, we have the European GDP and consumer price index. Usually these are not major numbers. This stuff like this can affect the DAX or any of the euro indices, that things like that. But I wouldn't worry too much about them in terms of the US. Now on the 30th, which is Friday, Chinese non-manufacturing PMI, wouldn't worry about it. So I don't see any major US news here. Since most of the stuff we trade, especially the stocks, obviously are all US based, I don't see any FOMC meeting. I don't see any NFP. So it's mostly euro stuff that's going on, European stuff. So again, important if you're involved in those forex pairs. Okay, so that's why I like to go over that really quick. By the way, tomorrow we have our podcast, the Talking Markets with Mark and Andrew show at 4 p.m. Eastern time. So if you can, check that out. I'm trying to shape that show so that it's more provides more value for listeners. So I'm trying to move it toward more stock picks instead of just trade of the week. Okay, just so you know. So the more support we get for that show, the more we can do. I'm trying to build that up. So if you can, please check it out. All right, so let's take a look at Bitcoin here and see what's going on. Now, we had those two swing trades. Okay, you all know, if you're in a chat room, you know about the swing trades because you should have received them by text and by email over these 3 weeks, right? So you know that the first one was way back here. I believe it was right there on that inside bar, right? That was the first one. And the second one was over here, which was much more aggressive, but it was still a potential trade. I sent it out by text, and some people actually got filled on that. That was an alternate trade, which means we chose not to participate in that one because we were long from 10,675. But what I want to focus on here is not the trade entry. I want to focus on the trade exits. Okay, so when we took that initial trade, we had our first target was pretty easy to reach. At 10,675, our first target was like in the low 11Ks. I believe it's like around 11.3 something or whatever. Okay, or 11.4. I don't remember the exact number. And eventually, it took that out pretty quick, or just on its first leg. The reason why we do that is because, because some people will ask us, why don't, if your third target is at 12.8, which is what the third target was for our first trade. 12.8 is all the way up here. Okay, that was our third target area. Here, actually, let me pinpoint it. That was our third target area for our first swing trade. 12.8 is here. Okay, that's 12.8. So people ask, they say, why would you get out of some at 11.3 or whatever it was when you're expecting this thing to go to 12.8? Well, because we don't know if it's going to get to 12.8. We anticipate that it's a good chance that it will, since the broader trend is bullish and it hasn't changed in a really long time. It's been bullish. Now we're seeing the result of that. So we have targets there in case the market chooses to test those highs, okay, which in this case, there it is. But we get out early because we want to do one thing, and that is reduce risk as soon as possible for the amount of risk we have to take, right? So we take an early reward to start reducing risk. This game is about reward risk. Now, people don't like that because they don't like the risk part. They only like the reward part. I understand. But the thing is, you can't make money focusing on the reward part because the market delivers these rewards randomly, pretty much. Okay, not always randomly, But, you know, there's no way to know that this thing is definitely going to 12,875. So, but the one thing we do know is if this trade is not going to work out, we know exactly where we're going to get out. So now this trade, we want to start reducing risk for something that's worthwhile as soon as possible, where it makes sense. That's why we start taking, we take profits off the table right away, 1/3, right? And then we have a target somewhere in the middle to see if it wants to do a continuation, which it gave us. It gave us a continuation, and that continuation pattern gave us a second trade, okay, in here. And that's where I said to people, look, if you missed the first trade, here's a chance to get in on the second trade on the continuation pattern, but it's risky because you're going right into this resistance area. It was riskier, all right? But I had a very tight stop. We actually put out a very tight stop on this, so the reward risk was enormous. The reward risk was amazing on this one because of that tight stop. But I figured, hey, if this thing is going to, you know, not work out, then really, I mean, or if this thing is going to go, it has no business taking up these supports over here. It really shouldn't do it. And here you go, right? That's what the market delivered. So there's, you know, if you see on this chart, I don't use any oscillators. As you can see, there's no oscillators on here. I'm looking at support and resistance. I'm looking at candlesticks, and I'm measuring probabilities, you know, based on the previous structures. Okay, also, and I'm looking at in the context of the bigger picture, which has been bullish. You don't know how many people were calling this a short over here. All right, the 10,675 area, you don't know how many people were calling that a short. And they laughed at me, like I said, they laughed at me there, saying, oh yeah, right, yeah, long, okay, whatever. Well, it was long, all right. And those same people, of course, they flipped, of course, because, you know, that's what they do. And that's that. So I wanted to review these things real quick so you have an idea, you know, why we have those profit targets. And the goal here is for you, when you put a trade on, you know, and you're putting it on using your own discretion, I want you to have an idea of, you know, how to take profits early, but not too early, but early enough to justify the risk that you take. If you're taking off your first target at around 1-to-1 reward risk, that's acceptable. Okay, the idea is to get an average profit. It's not to get, you know, people want the full profit. They're like, oh yeah, I want to get it all at target 3. That's not the idea. The idea is average profit. So that's why we split our targets into 3 profit areas. Okay, and basically we're looking for the average profit, which is 1,000 points in this case. So you have, if you find yourself focused on absolutes, focused on the extremes, like, oh, I want this, well, you know, you're not going to get very far. So you have to think more in terms of averages, not absolutes. Now, let's talk about Bitcoin and what we're looking for next. As you can see, I have a line drawn. I have this little series of lines drawn right here, as you can see, okay? And the market's trying to follow that so far. We have a sell signal that's in play right now. I wrote about this yesterday on TradingView. And talked about the low of this candle getting taken out at 12,903. I didn't have the specific number. I just, whatever that low is, if it takes it out, that's a sell signal. And that's what we have now. Does this mean we short it? No, we don't short Bitcoin. For those of you that don't know, we don't short this thing. We short the Qs, but we don't short Bitcoin. So now we're looking for a pullback. Why are we waiting for this area? All right, and will this market follow this scenario here? It might. But the thing is, this area, which was a very heavy resistance for a long time, is now we can reasonably anticipate a heavy support. Okay? Why is that? Why does it work like that? Well, because you have to understand, when it's an anticipated resistance, a lot of people who don't know what they're doing, they short that level. Okay? And what they do even worse is they stay short. And they say, oh, it'll come back, hopefully. Well, and when it comes back, what do you think they do? Here's my chance to get out. Here's my chance to cover. So you're going to have all those people that are short, they become buyers. And they are the ones that hold up the market. Okay? Now, on top of that, you have people like us looking to buy the pullback. So we're also stepping in there trying to buy. Now, some people are going to buy early because, you know, they don't wait for confirmation. They just start buying. So we're anticipating buying activity in here. That's why the probability of the market reversing in this area is high. And that's where we can measure risk if we can get our setup and our confirmation. So we have the location, the setup, and the confirmation. Once we get all that, we can measure our risk and we can take a trade. That is when we send a trade out. Okay, so that's the area. Now, this can take weeks to get there. I mean, I don't know. It may not get there. Maybe it'll find support sooner and we'll have to adjust. But the thing is, people want this to like occur today or tomorrow. Or you have people on the 30-minute charts. They'll see this candle right here. They'll see that tail on the candle, all right, on the 30-minute chart, and oh, a buy signal, right, buy signal right there. That's not a buy signal, not for our time frame. That's just noise. Okay, now if you're looking for a small bite and you're trying to grab 50 points, 100 points, okay, that could be a buy signal, but not on our time frame. So like I said, this can take days to unfold. We're looking for swing trades, and that's it. I'm not looking for any other type of trade. So this is a swing trade where the anticipated support area. Then we have to see how the market behaves. That is the high probability. Okay, so we know this in advance. All of our trades, pretty much, we have the idea, we have the plan in advance. We're not reacting to anything. A lot of these fake gurus that you go on and they react to stuff. All right, they're putting out trades as a reaction. If you're reacting, your chances of winning are very low. Okay, you have to be ahead of the market. You have to anticipate. All right, so that's Bitcoin. Those are how the targets. I wanted to talk a little bit about the targets, and I wanted to talk a little bit about what we're anticipating for the next swing trade, so you all have an idea. By the way, if you're new to Greenbridge Investing, please subscribe to the channel here. Also, if you like the video, please press the like button, and if you can, share it with your friends. I would appreciate that. Also, check out our website at greenbridgeinvesting.com. We have our swing trade signal service, okay, by text, by email. We send out a lot of stocks, Bitcoin, stuff like that, and forex too. But we've been sending out a lot of stocks because that's where there's been a lot of opportunity and options. Now, we also have a 7-day free trial. I highly encourage you to check that out if you haven't, because we're raising our prices. And once we raise our prices, our members will get to keep their prices, but people that sign up after the price change, you're going to be stuck with the higher prices. All right, so let's take a look at the next thing real quick. I want to take a look at the Nasdaq. All right, USD. Is that the right symbol? Yeah. So look at this. Okay, now this market's still open, and it's going to close soon. Oh, okay, no problem, DJ. Thanks for stopping by though on your vacation. I'd like to take one too, but I'm not allowed to. Anyway, so look at this. This is not a good candle. Okay, this is not a good candle in terms of going long or in terms of buying stocks. Now, the previous few days, as you can see, have a blue box drawn in there. The market tried, okay? The market produced some pin bars off at an inflection point. The thing is, the party isn't over yet, all right? We tested the inflection point. We got ugly, all right? We got ugly intraday. This is an outside bar, so it's possible that this thing breaks lower, but we can't make that judgment. Not even at this point. We cannot make that judgment, all right? Because we're at the inflection point. Usually you don't get exact things. You don't get like precise movement around these levels. It can be messy. So this is still a low to consider longs, but you don't want to step in front of it. Now, what do we want to see as far as the Nasdaq or as far as the stocks or even the S&P, which we'll take a look at here in a second? We want to see an inside bar, okay, something like that, and we want to take out that high. If we see this pattern, this is a long. Now, again, it's this type of candle that we see today, this nasty candle, that sucks in a lot of shorts, all right? They think this market's going to go to zero. They listen to too much news, all that other nonsense. It's either Dow minus 700 points. Oh, this market's going to zero. Okay. So they all get short. Not a great place to be short. They should have been short where we were short, way up here, okay? So this is not the place to go short. This is the place to cover. And as you know, we've been getting out of our queues, right? Our position's been reaching its targets. We're exiting. So the key here is, again, it's too early to start buying. So we have to wait for we have the level, all right, but we don't have a setup and we don't have confirmation. So we need to see the inside bar or something like that. Maybe we get a bullish pin bar or something. Okay, we need to see something. And then that would at least give us some sort of, okay, you know, we can start now. We can start doing something with this. You know, I would even be open to sending out a swing trade in the Nasdaq 100 CFD as a long, okay, at that point. But we don't have anything there now. It's important that I emphasize, we don't have anything there now. This is going to have an effect on stocks. That's why I keep talking about this. Let's take a look at the S&P real quick. Because, you know, there's a lot of stocks on our radar, right? Look at this nasty S&P. So, again, lousy bar after an attempted bounce. I thought the market was going to bounce after this bullish candle. I thought, okay, yeah, that's some nice bounce activity right there. But as you can see, they got faked out. Okay, no problem. This is not unusual behavior, especially going into what? The election, right? So here we are fooling around 3,400. That's a pretty important level. And buyers tried to step in. Okay, you know, intraday. Okay, fine, no problem. But we need to see how the rest of the week unfolds, right? It's too early to do anything because the risk is very high. We take out this low tomorrow, that would not be good. Okay, that means it probably has more bearish momentum to go. And I mean, it's possible, it is possible for this thing to test this far lower, which is what, 3,200, 32 and a quarter area. It's possible. So just something to keep in mind. All right, now we have the election coming up. What is it? Next Tuesday is the actual election. So going into that, I would imagine there's going to be drama all over the place. There's been a lot of drama so far. And like we talked about coming into this, you know, a month ago, month and a half ago, I talked about, you know, I'm not expecting a bullish market. I'm not expecting a higher high. I'm expecting a range, okay? And this is what we're getting. And we're right in the middle of the consolidation right now. All right, so, you know, here's our range high, this is our range low, and we're in the middle. So it's really, there's really nothing to be worried about here as far as the broader trend. The broader trend is not bearish. You can argue that this is a double top, but we don't have any support breaks, no major support breaks. So this can easily turn around. Obviously, if there's a stock market bullish outcome on the election, then, you know, and if that's near the low of the market, you definitely want to be buying stuff, right? So we want to be prepared for that. We want to know what we should be buying. All right. Obviously, market stocks are going to react well to stuff like this. Anything that's really correlated well to the market. Any stocks that pretty much the S&P heavyweights, Nasdaq heavyweights, you know all those. Okay. Anyway, so that's the situation in the stock market. Now, let's look at some particular stocks. Now, AMD was the trade of the week that we sent out the previous Tuesday. And as you can see, I think this is active, right? 82.80, what's today's high? 84.95. This trade is active now, all right? And it started off pretty good. Right? And then the market, you know, as you can see, the market sold off, and now this thing has gotten a little ugly on us. But this is not a bad situation. This is not a bearish stock. So if the market comes back, you better believe, and if this thing is not below this low over here, that 79 and a quarter low, if it's not, that's just going to be a consolidation and higher low. So this is still in good shape. All right. So don't be worried about one single candle. Now, if we take out the low, sure, that will be a sell signal. If you're in the trade like this, you have a couple of choices. You can wait for the stop, which is usually the best thing to do, even if it stops out. Perhaps you can unload partial, take a partial loss and let the rest go to the stop. At least you're still in it, okay? Or you can get out right away, take a small loss or whatever at the candle low and get back in when you get the next buy signal. You have a few choices, all right? But either way, usually what we do with these is we just let them go to the stop because we can't babysit them all right? And that's why we put the stop in place to begin with, to protect us. You know, from these type of situations. But anyway, the stock is still in good shape. Okay, what about stocks like Nikola? How's this one doing? Look, now this is not a market stock, all right? And as you can see, it's not really doing anything. Well, it's minus $1.62 today. All right, that's really not a big deal. And you see, it's not taking out any lows yet, not yet. So nothing wrong with that. How about Workhorse? You know, this one is on its low there. it's going into a support area though. So a lot of times this is how a bottom begins. Although it looks ugly, you know, we're in this because we took delivery on the stock. So we have, I think the cost basis is 23, and this thing is 1845. So we're taking some pain on this, but it's workhorse, you know, and we're at a range low, which can reverse again. You know how these things go. So you can't worry about stuff like this. These aren't heavy market stocks. Okay. What about Tesla? Everyone likes Tesla. Tesla is what, minus $1.67? That's like a joke for this thing. Okay. So what about Apple? Apple's probably gotten beaten up. No, not even. 61 cents? That's nothing. How about Amazon? That's real. What's Amazon? Minus 14 points. Again, there's nothing really major going on here. Okay. Nothing really major. So a lot of hype, I guess. All right, so that's pretty much, I wanted to go over those things. Also, let's take a look at the euro real quick. Eur Usd. Because this one, obviously, look, there's a lot of news coming out with the euro this week. And if you're going to do anything with this, I'll just say this real quick. If you're going to do anything with this, don't do it here. If you're going to do anything, wait till it pull back here. All right, if you trade forex, wait until like the low 17s. If you're going to do anything with it, wait for a reversal there. There's no reason to get involved in this thing here because it's got all that room to pull back, and there's all kinds of news coming out this week on this thing. So things can change real quick. All right. Now, if it breaks higher and breaks above this little consolidation, which is what, basically 18 and a half, 1870 area, it takes that out. It could have another leg higher in it. And this trend is not bearish, as you can see. So that's another consideration. If you like to buy the breakout, I would obviously take smaller size on that. All right, you guys, so that's pretty much what I wanted to go over. Let's go over what you guys want to see, all right? I've been talking for like a half hour here, and I think everyone's going to sleep. All right, so let's take a look at what you got. Now, real quick, if you're new to Greenbridge, please make sure you register for the YouTube channel here. Like the video if you like it. I only see one like. I guess no one likes this video. I only see one like. I'm depressed now. All right, and also if you can, share it with your friends. And check out our website, greenbridgeinvesting.com. We have a signal service by text, by email, and we share a lot of great insight there. We have our chat room, and we have portfolio management ideas by email as well. All right, let's see what you guys have here. Let's begin with HS. Okay, oh, thanks, HS. So Sean, BAT, okay, basic attention token. So BAT, USD, is it USDC? Okay, yeah. So Coinbase. I guess what? Coinbase has their own whatever. Okay. Now, this thing, for one, this is the one that is basically what they give you, or it works with. It's the utility token for the Brave browser. And you know, I mean, I don't like it. Okay, I don't like it. I don't like it because, you know, for one, there's really nothing going on here. Yeah, you're near a support, but I don't see like any reason to get this thing with the move that Bitcoin made. Okay, if this thing was going to follow Bitcoin, it should have been pushing these highs or something. It should not be underperforming like this. So I would not really go nuts with these type of things because obviously they're going to be driven on specific news. Okay, something like this. Obviously, there was some news back in August or whatever, right? That got everyone excited about it. And as you can see, once that excitement is over, it turns to garbage. And I really don't, you know, I don't know. I'm not a big fan of these type of coins, especially when they're utility tokens. So, but as far as technical, from a technical point of view, sure, you have a support here. What is that, 20 cents? You have a support there. There's no reason to buy at the moment, right? You don't have any green candle there. And if it can hold that 20 cents and give you a reversal, I mean, the next inflection point would be, what is this here? 26 cents, something like that. So that's really what you're working with on something like this. There are better coins out there. You know, there are better charts. So I would, you know, if you're not involved in this, I wouldn't get involved in it. If you are in it, you know, and maybe you're waiting for a place to unload some or maybe or whatever, then 26 cents would be one place. If it could clear that, then I would just let it run and see how far it goes before you get another sell signal and just start locking in more if it gives you that opportunity. That's how I'd play it. But right now, it's just, it's really nothing to say there. All right, so thank you for bringing that one up. Okay, Kev, ZVO, is that a currency or is that a stock? Let's see. I guess it's a stock, Zovio. So just correct me if I'm wrong, but so let's see here. First thing I want to see are support and resistance levels, right? We have a resistance there. All right, no problem. Let me know if you have any other ones. I know we had in the chat room, we had some questions about, we had one DOT, which is a currency, and then we had another one called CRV, I think it was. I don't remember which one, but I'd like to go over if anyone knows which one that is, the one with the C, let me know. All right, so these are the levels on this thing that you're dealing with right now. Now let's look back a little further and see if there are any other levels that we should know about. Okay, not really. So in this stock, you're coming off, you have a support, which is proven around this area. All right, you can even say it's about there, around the $4 area. Okay, so obviously they're looking at the whole number. You have a general bullish structure, which is good, right? I see a series of higher lows and higher highs. You have a pullback, it tried to pop up, so it broke that bearish momentum. Okay, fine. And you got a sharp, sort of a sharp pullback. Okay, so the question is it a long? Oh yeah, I would agree that you can argue it's a long here. It's worth a try. What is your risk? The risk is going to be defined by that area, which is around 375. It would probably be a good idea to put the stop around 350, somewhere around there, because you know how these things go. Everyone puts their stop right at the level, and everyone gets stopped out. Okay. So you want to put it a little bit lower if you're going to do something like this. The reward potential on something like this, for one, you're going to be looking at this area right here. This is definitely an inflection point that's still in play. So what is that? 494, so the $5 area. So if you're buying this thing near 4 and you're trying to sell it near 5 for one target, okay, that makes sense. I mean, that's almost 1-to-1. Well, no, what are you risking here? Yeah, well, if you're risking about 50 cents, something like that, and you're trying to make $1, or a 75-cent risk and trying to make $1, yeah, it's more than 1-to-1 reward risk. So that works for a first target. Then you want to put like a second target, probably somewhere in this area, maybe the 5.5 area, something like that, because you're going to have some selling based on what I see here. People are probably going to be like, okay, yeah, I want to get out of some here, especially if they're long from there. And then you want to see if it could break out, right? So you try to let the third part run until you get a sell signal, right? That sell signal may appear right away, or it may run a little while, right? Like it may appear there because, again, you have people that are long from there and they're going to want to get out. So you may have that, but if it clears it, then you want to try to give it a chance. That's when you really have a winner. Okay, at that point, and then you just wait for a sell signal, and you hold it until you get that sell signal. So that's how I would play that. But your first two targets should probably be in this area if you're getting involved in something like this. Now, also I have to tell you, at the moment, this current candle, is not exactly a buy signal. Okay, I have to let you know. The candles before it, sure, you can argue, and it took out the high over here, 394. It took that out. But now we're fooling around at what, 416? All right, I mean, I guess you can argue that a buy signal is in effect, but look how this is closing. So I wouldn't rush into this, okay? I would see if tomorrow, if you get another red candle, or if you get a green candle. If you get a green candle and you take out the high, 4.25, 429, whatever, okay, then it might be worth giving it a try, okay? And as you can see, this thing should take what? I mean, previously it's taken about a week and a half to make a move. So you want to see this thing start to pretty much do its thing relatively quickly, within a few days. All right, so that's Zovio. Now let's see, BLI. What is that? Let's see. BLI. Lights, okay. And, well, here's the thing. So I see a level. Obviously, this is a newer stock based on this chart. I see a level right there. All right, that's pretty easy to see, but there's no reason to buy right now. Not only that, you have a lower high in place right here. Not good, okay? Not good if you're looking for a long. Now, you may have a double bottom situation, all right, or a failed low. It may turn into a failed low. It's possible. Thing is, you don't have anything there right now. So I would keep this on the radar and I would wait. All right, if you can get a bullish pin bar here, perhaps tomorrow or the next couple of days in a break of that high, then it may be worth a try. Now, your risk will be defined by that candle, obviously, which we don't have at the moment. I would not buy into this right now because there's just nothing there. Maybe tomorrow, if you get an inside bar and a break of that the next day, okay, then you can measure your risk from this low, which is what, 73.5 area. So basically 73 even. You want to give it some room at that point. But right now, this thing can go lower. Okay, so I would wait on this one. You have plenty of potential, obviously. The first target would probably be around here, the 79 area, 79.25. So if you're risking $1, $1.50 to try to make $3 or $4, hey, that's worthwhile. All right, especially if it's only for your first target. And obviously there's some more potential there. So I like the location. There's just, there's no setup and no confirmation. All right, so thank you for bringing that one up. Interesting. Okay, all right, DJ, let's see. So Kev, do you think Bitcoin is filled with more inexperienced traders and stocks? That's a good question. That's a good question, Kev. Well, it used to be. Bitcoin used to be complete morons, just 100%. We're talking, back in 2017 when institutions weren't involved. But today, institutions are involved. So as far as investors and traders go, there's a lot more smart money involved in it these days. And that started to change, in 2018 when they introduced the futures and all that stuff. Remember, you have futures trade. You also have stocks. You have like Grayscale, and have these stock funds that are buying Bitcoin. So I would say today you have more experienced traders and investors rather than inexperienced. The days of complete morons, those days are over. All right, that was back in those days. It was pure herd mentality. If you saw the stuff that went on on TradingView back in those days, and the kind of criticism I used to get because they couldn't stand the truth, I mean, it was really funny. So, but today, and I talked about this too when it was changing. There was a lot of hype back in 2020 going into 2018. Many of you may not remember, but there was a lot of hype about the futures. They were going to say, oh, when the institutions enter the market, Bitcoin's going to go back to 20K because that's going to be all this big money pouring in. But I said that's actually the opposite is going to happen because institutions don't want unstable markets. They want markets that don't move. That's how they're able to manage positions and keep their risk low, right? They don't want wild markets. They don't do well in wild markets. There's too much risk. Institutions and smart traders, the smart money, they're focused on risk, right? They do the right thing. That's why they make money, because they're focused on risk. They're not, and the reward comes as a byproduct. Smart money knows that, okay? And they're also doing things for different reasons. They're not just speculating, okay? The average retail investor is basically speculating, right? We're trying to take a position. We're trying to put some money to work to make some quick profit. And, we're taking a risk to do that. In theory, we're supposed to get paid for the risk that we take, right? That's why we're supposed to get an outsized return for the risk that we take. But if we have no idea how to manage risk, well, we're going to have problems. And the only people that are going to make money are going to be people who know how to take advantage of our lack of ability to manage risk. And that's where stop runs come from. That's where getting margined out and all that kind of stuff. That's basically retail traders getting pushed out of their positions. And who do you think is on the other side of those trades? You think it's other retail traders? No. Okay, and that's why we make fun of like Robinhood and stuff, because what do you think Robinhood is? But without those people, smart money can't make money because you need someone to take the other side of your trade. All right, so that's a great question, Kev. I could talk about that for hours and hours, but I don't think you want to hear it. So thank you for asking. We also asked about like forex and stocks. Well, there's a lot of smart. Obviously, in forex and in stocks, there's a lot of smart money. I mean, forex, you're basically dealing with banks. You know, the forex brokers like forex.com and all them. They're just, they're just a middleman between the retail trader and the bank, and they're just making some money off of people who don't know what they're doing. Forex is notorious for gambling on the retail side. And I remember, I mean, actually worked for a couple of forex brokers. Forex.com was one of them. And their whole business model is based on the herd not knowing what they're doing, right? They bet against, that's why they bet against their customers, because they know 80% of their customers are going to be wrong. So that's a good bet. And some of their customers will be right, maybe randomly, maybe some of them are skilled, but that's okay. You know why? They hedge those bets. It's all automated too. It's not like they have a trader on the other side of the screen. It's all automated, right? That's managing everything for them. They don't really have, their trade desk is very small. And you know what, their trade desk, their purpose, at least back then, their trade desk really only served one purpose. It wasn't to speculate. It was to basically get people out of positions or margin people out. That was their job. So they had to manage the overall risk of the book. If people were, if there was a margin situation, they would liquidate the positions. Or if there was a big deal that had to get done, they would do something with that. But that was pretty much it. They weren't sitting there speculating. They weren't taking positions based on a direction. They weren't doing that. They had no idea how that worked. And you would think, oh, he works on the trade desk. He must know something. They didn't know anything. All right, they were guys from, went to school for economics, and they're sitting there making a market in a foreign currency. They have no idea what's going on. They're just following the computer. Anyway, all right, enough about that. All right, so, I mean, that's how it was back then. We're talking, many, many years ago. The data that these exchanges have is amazing too. Automating trades based on, oh yeah, well, these exchanges, there's no trader on the other side of these trades. I mean, today you can make a market with a computer could make a market. The computer, an algo, they call them algo. In fact, there are whole companies out there that are algo market makers, okay? And their whole purpose, they only do one thing. They look to be the first on the bid, okay? Meaning they need to be first in line on the bid queue. They get filled and they put it on the offer, a tick higher or whatever, and they do that 25,000 times a day. That is all they do, and a computer does it. Okay, so their engineers focus on how fast they can be on that bid queue, and they're focused more on the technology. They have no idea about trades, and they take little to no risk. They also move a lot of size. So they serve an economic purpose, and that is to provide liquidity. But the thing is, a traditional market maker was obligated to provide liquidity. If the market was selling off, a designated market maker or a traditional market maker has to buy the other side, right? That's what they're supposed to do. But these other ones, they don't. They can just not be in the market. If the market's not what they want to do, they just pull out. And that's why sometimes you see these exaggerated moves, because all the market makers are not real market makers, and they vanish. And all that's left are retail traders banging it out because they don't know what they're doing, right? So, and there's no one to take the other side. So that's they're market makers, and they're not playing direction. All they're doing is they're taking very low risk to make a tick, and they do it with a lot of size, and they do it a lot of times. That's their game. We can't compete in that game. We're not a computer. They see trades that happen so fast that you can't even see them with the naked eye. You can't even actually see the trade. Okay, they do it in stocks, they do it in futures, they do it in forex, they do it all over the place, right? That's why they say 40% of the Nasdaq or whatever they say is algos, right? So that's what a lot of them are doing. Okay, so anyway, I do like hearing about it. Thanks. Okay, the BTC charts were insane, right? And that's Kev, and that's a function of these institutional players, right? Because now, again, institutional players don't react or overreact. they're pretty much, they're buying into weakness, they're selling into strength, they're working with average prices, they have a lot of capital to work with. They also have better access to information. Do you think, the people that run Grayscale or the people that run some of these other firms that basically manage funds, do you think they're sitting there reading Coin Market Cap, or do you think they're sitting there reading Coin Telegraph and seeing all the garbage on there? No, they have their insider resources that they, because again, in the Bitcoin world, it's perfectly legal. So I'm sure they have relationships with the exchanges, especially if they're buying large positions off of them. So they're going to have access to better information, real information, and they're going to know, if there's a sell-off, they're going to know when it's safe to buy into that. They're going to know because they can just make a phone call. I mean, this is all conspiracy theory, but the thing is, it's not illegal in the Bitcoin space. In the stock space, it is. You can't do that sort of thing. But there's no one regulating Bitcoin. Still, there's no one regulating it. So again, if you're a fund, what's to stop you from calling the CEO of Coinbase and saying, hey, look, I want to buy a big position, what can you do for me? And what other information can you give me? I'm going to give you a lot of business. Okay, sure, here's how, and that's it. The deal is done, right? A retail trader can't do that. So that's when you don't have those type of resources. And how do you think a company like Goldman Sachs works? There's some of these really big companies that have, they have pull in the law, like they have pull in politics. Goldman Sachs particularly. A lot of those CEOs and a lot of those high-level Goldman Sachs people usually go on to become treasury secretaries, chairman of the Federal Reserve or whatever. How do they get there? So that's all, there's a lot of stuff going on there that we'll just never know. Point is, we don't have those resources. So we have to play a different game. But that's the thing is when you're a large player and you have that type of resource, you're going to be able to manage risk in a different way, and the markets are going to be more stable. All right. So when you go back to Bitcoin, BTC, USD, I mean, yeah, we had a recent move recently that had that nice rally recently, but for the longest time, I mean, we haven't seen like 1,000-point move in Bitcoin in a really long time. And you can see it spends a lot of time in these consolidations. Okay. Spends a lot of time there. Those are places where large firms and large players, that's when they're doing stuff, okay? They're not doing stuff, where you think they might be doing stuff like, oh, right here, they're buying right here. No, they'll put out news. They'll say, oh, yeah, Grayscale bought, 10 million Bitcoin, or Square bought, whatever, and Square is investing in blah, blah, blah. Yeah, meanwhile, Square was doing it back here, okay? They're not going to tell you that they're doing it here. They don't want to make it worse for themselves. Okay, so that's when that Square news actually was the news that started this move, I believe. I think it was this move. Yeah, it was because I remember it was like on a Friday, and that was that Square. Do you think Square was buying it at that point? Square was in. Okay, so do you think other people, insiders that are involved with Square or maybe other connections, do you think they didn't know that was coming out? And then, of course, all the retailers react when the news comes out. Oh, do you hear about Square? Right. So that's the way you have. That's why I pay no attention to news, because it's useless. It's only for retail traders to react to. I look at levels and I look at behavior around the levels, because that's where the reality is. Right. So right now, where we are, again, I anticipated some selling activity here. We're getting some. I don't know how far we're going to pull back, but this is certainly not buying activity, not right now anyway. So I know that the next area of probability is here in this area, right? That those low 12,000s or high 11,000s. That's where it is based on structure. Structure tells me where previous buying and selling occurred, and I can rely on that information. Okay, I don't know why the buying or selling occurred. I don't care why it occurred. When we have our podcast, Henry and Andrew, they always talk about why. Who cares about why? I know that's what listeners want to hear. They want to hear about why. But why doesn't matter, okay? Really, in our case, it's about where. As a short-term trader, I'm only interested in where. What is going on right now and where. And that's going to give me enough information to to take a chance on something if everything lines up. Okay, that's the short-term mentality. So everyone likes long-term stuff. I mean, look at CNBC. They built an entire successful empire on selling, mostly information that doesn't really make any difference, but people like it. It sounds good. Okay, and that's logic. That's what people want to hear. They love to hear a good story. They love to hear why the stock should do this and all this nonsense and blah blah blah. But it doesn't really matter. Okay, so that's pretty much it. I know I'm ranting now because you guys got me ranting. Let's take a look at. I want to take a look at Jumia. How's this thing doing? We made it as high as 19. Wow, it's at 18. Look at that move. This was a trade of the week too, by the way, but we exited at 13.50. Wow, interesting. Okay, anyway, all right. So that any other stocks that you guys want to see, or anything else? That's right, Sean. That's exactly what it is. That's it, because it's just stimulating information. I mean, that's what porn is. So market porn, it's stimulating. You get all this news, you get whatever, and it's stimulating. What are those stocks? Not stocks, currencies. We had a question about this DOT against the dollar, and there was another one too. I can't remember the other one, but we had a question. Someone asked about this, and this is a perfect example of herd mentality, price action. Look, I mean, what do we have right now? What is this? It's a bullish candle. It's vertical pretty much, right? So this is going to get attention. This is going to say, oh, maybe I should buy this. Maybe this is going to go up here, right? Because look, it's starting. But the thing is, if you're not in this, then this is not a good time to buy. You're buying the top, a potential top. Right? Now, sure, it may continue, but it may not, right? And there's really no way to know. The most important part of this is not trying to figure out if this is going to continue or not. The most important part is, well, how much risk am I taking if I buy it right now? That's the first question you need to ask yourself. How much risk am I taking if I buy this now? And if you look at the supports, which is basically right there, if you look at that support, that's how much risk you're taking at minimum. So what is that? $3.85 is that level. So you figure you're not going to get out there if you're wrong. You're going to get out lower. So you figure you're going to get out like around here somewhere. So $3.42 around there. So you figure, okay, 340, 330. So this thing right now is at 468. So you're looking to risk, or you're facing over $1 of risk. All right. So sure, you could go in with small size and say, all right, I'll just buy, 100 coins or whatever. And if I lose $100, big deal. All right. I lose my $1.50, whatever. Or I'll buy 50 coins or whatever. And yeah, the risk isn't, you control the risk with your size. You can do that. But if you're thinking of a bigger position, why it's not necessary? Why not get in at a better price when things are going more in your favor much faster? Like here, right? So if it can pull back to that 385 or maybe 350, now that's a place where you should be paying attention. That's a place where you should be looking for the initial green candle like this, right? Something like that. And then take your chance, okay? As opposed to here. At this point, you should be looking to be locking in profits, right? If you're in from like 385 or whatever, and this thing's pushing almost $1, this thing made it as high as what, 475? Target one should be around here somewhere, okay? And now you're looking to buy? So that's what you have to think about on these things. Now again, I could be wrong, and this thing can pull an OMG and go to $10, right? In the next 2 bars. It can happen, but it's a low probability. I'm not interested in low probabilities, all right? So that's DOT. I don't even know what they do. And there was another one. I think it was it CRV? Is it CRV USD? Was that the one? I think this is it. Let me see. Okay, that might be it because look, it's got a similar situation. Okay, now, definitely don't like this price action. That's not good. Now you do have a double bottom situation here, and you do have a nice candle off that double bottom, and it has taken out this resistance right here. okay, and it's closing strong. It looks like it's going to close strong anyway. All right, technically that's a better situation as far as taking risk goes. The problem is, and when I say technically, I'm talking about the short-term location and setup. But the bigger picture, which obviously this coin hasn't been out very long, or at least not on Gemini. Is there a USDT version of this? Let me see. Hold on. CRV USDT. Well, that's even worse. Okay. How about CRV USDC? Is this on Coinbase? No. CRV USD. All right. So I guess this is what we're dealing with, Gemini. You know, again, so I would be very careful with something like this, because even though you took out this little minor resistance, you're still competing with a pretty heavy bearish trend. So I would wait. In this case, the best thing to do, wait for stability, right? What is this thing? 35 cents. I mean, all right, so you can risk it going to zero, and you can buy a bunch of it. And if it goes to zero, that's where you put your stop at zero. You could do something like that, and if it works out, great. But that's, you know, it's a big gamble. You want to take that kind of gamble? That's up to you. But right now, there's no reversal. There's no reversal structure present. So I would expect this thing to maybe go up to a point and then test the low again. That's likely to happen, and that's probably your better opportunity, okay, in terms of risk. So those are those two. Okay, so I got through those two. Kev, charts equal reality. Thanks again for showing. Okay. Well, yeah. I mean, that's, you know, again, it's putting the puzzle pieces together from the chart. And the chart is really, again, where the reality is, not anywhere else. I don't know where people get all this other stuff. I guess it's just human nature. They think more is better and all that stuff. But all the information you need to make decisions with incomplete information, because that is what we're doing. We have no choice. That's where we're going to be able to measure our risk the best, based on structures from a chart, right? And there's reasons for that. Part of it is, you know, the market bakes in all information. The market is a discounting mechanism. In fact, I'm going to do a part 2 of my webinar, most likely this Saturday. And it's going to cover that type of mentality, or that type of logic, or philosophy, I should say. Okay, so that's pretty much that. There was one other stock I wanted to take a look at. Now I can't remember of it. Oh, Groupon. See, Groupon, guys, this is a stock that I'm considering sending out a swing trade signal on. I just thought of it now. But I'm considering this. Look at this price action, right? Not bad considering what an ugly stock market we've had today, right? Look at this situation. We have a failed low. Okay, we have a push off the failed low. And today we're getting this little bullish pin bar. It's much better than seeing a lower low. I'll tell you that, because with this market sell-off, we should have seen a lower low. Now, Groupon isn't exactly a market stock. Now, some people may argue, oh, the fundamentals, Groupon sucks. You know, they work with small businesses, and small businesses are out of business. I don't care about any of that stuff. Obviously, someone is buying the stock. Someone is, because it's not pushing lows. Okay? So for the short term, this thing may be a good swing trade long. Remember, I'm not looking for this thing to go to 100. You know, I'd be happy if this thing could make the middle of the range, which is what, like in the high 20s. That's not that hard considering it's at 19, basically it's at $20. Getting to $28 is not that hard for this thing. You know, if you're expecting it to go to 50, okay, that's, you know, that may be unrealistic. But high 20s, maybe even 30, or the low 30s, that's possible. You know, and that's over a period of a couple of weeks. So definitely keep an eye on this one. I may send this one out tomorrow, Groupon, or maybe even, you know, before the stock market open tomorrow, because this thing could gap. We have to see how the overnight action is. But this is not exactly a market stock, okay? So I'm not too surprised that this thing is doing its own thing. All right, anyway. All right, cool. Any other questions? I've been at it about an hour now. I've done plenty of ranting. I see I have some more likes, so thank you everyone for the likes. If I don't see likes, you know, then I'm like, all right, no one likes my videos, and I shouldn't do them anymore. But, you know, maybe people just forgot to press the like button. But anyway, okay, I see more now, so we're good. Anyway, any other stocks that you'd like to see? Groupon, by the way, may be a good options play. This may be another one for for like an out of the money $30 or $35 call 6 months out. If you can get it for $2, something like that type of play. All right, so we got a question here. SXP, sure, let's take a look. SXP, yeah, this is Swipe. I've looked at this stock, I'm sorry, this coin, because we've gotten questions about Swipe before. So here's Swipe against Tether, and this is not what it should be doing if you're long. For one, this is not a good candle. Now, we do have a support. It's going into the support. All right, it's actually breaking that support a bit there. This could turn into a failed low. It's possible. The problem is, right now, there's no reason to get involved in Swipe right now. You know, if you had bought it earlier, perhaps on this attempt, right, there was like a bullish attempt here, and it does this, you have a couple of choices. You either get out of the whole thing and take a loss, you unload a portion of your position so that you don't have to be exposed if this thing just keeps going, and then you're prepared to get back in, right? You can do those things, or you can just hold on and see if it goes to zero. But right now, this is not what you want to see if you're long. If you're flat, if you're not in this market, then there's nothing to do here except wait for a reversal, right? If a reversal develops over the next couple of days, like an inside bar or a pin bar in this area, then it might be worth giving it a try again, okay? And use this low here, what is that, 90 cents as a potential area for a stop. Obviously, you want to put it at around 85 cents. Okay, SXP. Okay, hold on a second. SXP. I don't understand. Is this not Swipe? Let me see. SXP USD. This is Swipe. Right, that's what I thought. Right. So what's the other one? What is that one? What's the ticker for that? What is the ticker for the other one there? I don't know. I don't know the ticker of that. But I am actually. Let me type it in. Maybe it'll tell me. KCS. Okay. KCS USDT. Let's see. Okay. Got it. Swipe. Oh, against? Do they have such a, so SXP against? What would that be? KCS? Would it be something like that? No, this thing doesn't like it. Let me see. Do they have it against that? I'm looking for it here. I don't see it. What would be the symbol be? Let me see. KU. I'm trying to find the symbol that you're talking about here. I see XRP. I see against Bitcoin. I see against Tether. I don't see it against Swipe. I don't see it against Swipe. Let me check SXP. Let me just check all the choices I have here. I'm sorry, I'm a little slow with this. I'm going to look through these. Let me see here. Just looking through here real quick. But if you have the symbol, just let me know. I'm not seeing it. Okay. So you just want to see it against USDT. All right, because I don't see it against, yeah, all right. So if that's the case, here, let's take a look. SXP USDT. Right, like I was saying, if you're in it, this is really not a good situation. It shouldn't be breaking that support. So a couple of things you can do, like I said, because you're first of all, you're competing with a very, very ugly chart. Okay? You're competing with an ugly chart here, for one. This is ugly. This is bearish, this whole situation. But it tried to bounce. Okay, no problem. So there was some risk justified in here. But now this is not good. So this is pretty much should be a stop out, technically. But like I said, if you want to try to give it a chance, if you're long, one thing you could do is maybe get out if it takes out today's low, right? Get out and then wait. That's one thing you could do. Or like I said, You can unload some and see when it stabilizes and try to get back in. That's another thing you could do, because this thing could go to zero. I mean, it's obviously it's bearish. If you're not in it, like I said, there's no reason to get in right now. Wait for a reversal. If it could reverse in this area, okay. Oh, but it's not telling me. I don't see that. That's an exchange. Let me see. Hold on. SXP. It's not giving me that choice. Let me see. Oh, I see. I got you. I got you. Okay, I'm a little slow. Okay. Because I don't follow it on. I got you. Here we go. Oh, so you're saying the full price as far as its price history. All right. So even with that price history, I see what you're talking about. I see why you might consider this potential long. I could see that, because you have this bullish structure here and you're correcting it. Okay, that's fine. You're correcting all that. So this is still potential high or low. So you still have the location. Sorry, I'm a little slow. You still have the location going with you here. Okay, you still have the location, but the problem, again, you're still facing the same problem. So this high or low area, that's fine, but today's candle is still not good. So like I said, if you're long and you got long recently, either you take your loss, okay, and not take any more risk right now until this thing stabilizes. That's one choice. Or if you really believe in it and you're like, I don't want to take the loss. Okay, well, I would not add any more at this point. I would wait until this thing stabilizes. Again, if it can stabilize, it's the same story. Even with the bigger picture, you have an attractive location, but you have no setup and you have no confirmation. So if you can get the setup or the confirmation over the next few days, like an inside bar here, a bullish pin bar or something, then that would justify this level. If you're not in, then you can justify taking a risk at this point with a stop, like I said, around that in the maybe the 85-cent area, something like that. It's wise to use a stop in these situations, because these things can turn to complete garbage. Remember, they don't have much to offer. Remember that. These are not real assets. Andrew's even been saying, like, a lot of them, they solve problems that that don't need to be solved, type of thing. So you have to be careful with these. It's not like you're buying even cannabis stocks. At least they have a product, So just something to keep in mind there. So if this thing reverses and you want to take that chance, you want to take that risk, okay, fine. That's worthwhile. It's worth taking the risk. You can measure your risk, and then maybe this thing will bounce off this double bottom. Okay, and then maybe you'll have some room to run there. Okay, again, these are highly speculative. If it just takes out this low, this current low of 90 cents, takes out that low, I would just step aside and let this thing stabilize. Because again, you are fighting the lower high. You have a lower high, and in theory, it should make the lower low. Even though this is not a full-fledged bearish trend, it's a correction of the broader bullish trend, the bearish structure is still in play until it can prove itself. Okay, and you'd still have, you have no resistances taken out yet. All right, so another consideration is don't get involved until it starts taking out resistances. All right, and your first one is basically $1.36, right? Your second one is over here somewhere. So sure, you're not going to get the best price, but at least you'll have some confirmation. Or perhaps if it takes out a resistance, wait for the next high or low, and that's when you start putting on some risk. That can take some time to play out. That could take a few weeks. Just have to be patient. So again, this is also an area you want to take a small bite. If you don't have any, you want to take a small bite. So if it keeps going against you, it's not that painful. And then you add more as it starts breaking resistances. That's something else to consider as well. All right, wow, that was a really long analysis. All right, so I hope you found that helpful. I'm going to wrap this up now. I think I got everyone's questions. Again, thank you all for the participation. Thank you all for the great questions. Again, if you're new to the channel, please subscribe to the channel. Also, like the video if you like the work what I'm doing here. It's very encouraging. And if you can share it with your friends, that would be helpful too. All right, so also check out greenbridgeinvesting.com. We have swing trade signals by text, by email. We have a decent track record. Check it out. Check out our chat room. We have a 7-day free trial, and we are raising our prices soon. So if you get in now, you're locking in the low prices that we've had for a while, and you don't have to worry about the higher prices because we don't raise prices on our members. Okay, so wanted to leave you with that. If you have any other questions that I didn't get to, please come to our free chat room. You can ask there, and I can get to it there as well. All right, everyone, so enjoy the rest of your day, the rest of your evening, wherever you are in the world. Thank you again for listening, and I will see you next time, which will probably be Wednesday or Thursday. I don't know exactly yet. Also, check out our show tomorrow, Talking Markets with Mark and Andrew. We'll be on here, same channel, at 4 p.m. Eastern Time. Okay? Thank you again for watching.